Anytime there's a shock like this, the question is always, is it the start of something new? And I have the answer. The answer is nobody knows, right?
That's not a helpful answer.
Well, what we do know is that there was a big move preceding this to the upside. So look at the momentum versus value.
Sure, I think we have that chart over for the last 4 months. You were saying it got really extreme in favor of momentum.
Exactly, 54%. Right, that's just something that we haven't seen in at least 10 years.
So that's a spread of a performance spread? That's
correct.
Huge.
Huge.
Wow.
So we knew that couldn't be sustained. The point was, when was it going to come down? And if it did, what would it look like? Now we know. But as it's come back down in, it's now back into just a trading channel that's been in place since 2016.
And we can show that as well. So your point is, look at the very, very end of this on the right-hand side. There's this big downward spike. That's last week, but it doesn't break us down out of this upward channel, which says what? That momentum names are still going to work, basically?
I think we have to respect the long-term bid until it changes. Mm-hmm. And that's right now, it's still obviously higher over the last 10 years.
When we talk about momentum names, when I've looked at that ETF, some of the names are surprising. I mean, yes, you have kind of if you want to call them software names, you have big tech, for example, but you also have consumer staples companies. You have things, like Fastenal. What I'm trying to say, you have companies like Comcast that are not necessarily the usual suspects. What does that tell you?
That's right. So I think one of the reasons that caused that spike, you had the bomb proxies going up at the same time with high growth. So we had this very extreme move, now back down to the other side. And I think if you turn to value, now, obviously, the complete opposite. So that chart shows a really big spike right back up to resistance there. Yeah. And because of that, I think you had to look to what the 10-year yield did. Now, last week, 10-year yield was up 22%.
Yeah, huge.
The biggest weekly change since at least 1962.
Wow.
So that can't be sustained, of course. Whether it can stabilize or not is a different story.
Right, and so we see it today. We're back down to 175 with about 8 or 9 minutes left to go until this Fed decision. Want to ask you about that, but also want to ask you about the software names. You're homing in there in particular. Why? Right. What are you looking for?
Well, if you look at high growth and leadership, IGV software ETF has been that. And over the last number of years, it's outperformed the S&P 500. Now we're getting to a point where it's obviously lost some of that. Third time, really, since the beginning of 2017. Previous 2 times, demand came in, outperformance continued, S&P was higher.
So in a nutshell, if the value rotation continues, then it could be a breakout. But for right now, it's just put us back, and it's been just a course correction.
I believe so. I think you have to respect the trend until it changes. We've seen these things play out for multiple years at a time. Look at the bond market, 40 years of one way.
Lower rates. Is
right.
The Fed going to change any of that as far as you're concerned today?
I mean, I don't really see that happening. They're definitely going to talk about things they can do going forward, but I always think the reaction to the news is more important than the news itself.
Yeah, we've learned that the hard way. Frank, it's compelling stuff. Thank you so much for joining us and kind of breaking it down a little bit.